Okay guys, today we are studying ACCA F3 exam, which is the first financial accounting exam of ACCA. But the purpose of this video is two things. One, answering questions efficiently, especially section B of the exam, which is 15 marks question. Many people struggle in section B of the exam. This is the reason why many people fail F3 exam. And second thing is the strategy, how to attempt exam efficiently and answering question in a good sequence. So I'm going to do two things. One, I'm going to attempt this exam, full exam, 37 questions, and then I'm going to attempt another exam which will only be section B 2 questions. So I'm going to attempt full exam and then an extra section B just for extra marks. So let's start with the exam. First, let's talk about the structure of the exam. We have 2 hours exam, 50% pass marks, and then the section is divided in the exam is divided in 2 sections. We have section A and section B. Section A is 35 questions, 2 marks each, which makes it 70 marks. So you can pass ACCA F3 exam by attempting section A only. So that doesn't mean you only have to attempt section A. Now there's another section, section B, which is 2 questions, 15 marks each, which is 30 marks in total. Okay, this is the exam. Let's see what is on the screen. So we have ACCA logo here, and then section A and question number. The marks will not be given in real exam, and the time remaining, which is decreasing, and then exam percent complete. So this shows how much of the exam has been attempted. And then if I click here, it shows all the questions. There are 3 things here. 1, golden, white, and flagged. Golden, now these numbers are white. It means these have not been attempted. They are incomplete. And once we complete a question, once we answer it, it will become golden. Now, golden doesn't mean that the answer is correct. It only means we have attempted it. So the reason we have this white mark is so that you don't leave a question. And also, if you leave a question, this percentage here will not be 100%. So we have section A, 70 marks, already explained, and section B, 30 marks, 2 questions. And then we have name of the paper here, then we have exit here, and then flag. Flag can be used for many reasons. You can use it if you have a doubt about a question and you want to come later to it, but I use it for another reason. So the first thing that is important is in F3 exam is how to attempt these questions. The strategy. Many people have different strategies. Like some people like to start from question 1 and they work all the way to question number 37. Some people attempt section B first and then they attempt section A. My approach is a little bit different. I start from section A, but I only answer some questions, not all questions. Then I go to section B, then I come back to section A. The questions that I answer in section A are theoretical questions. The reason I answer theoretical questions first is because theoretical questions take less time. If I know them, I can answer all of the theoretical questions in less than 10 or something minutes. There will be around 14 to 15 questions theoretical in the exam. So if I answer theoretical questions, let's say 14 questions, then 14 multiplied by 2 will become 28%. So that means I would have attempted 28% of the exam in less than 10 minutes. And secondly, I come to section B. The reason I come to section B is because section B questions are difficult. They need focus. And you are going to have focus in the beginning of the exam. So it is good to use that focus on these bigger questions. If you can't attempt section B initially, you will not be able to answer it later. You are going to get tired. You are going to lose your momentum. So it is better to do it initially. So you will have a big burden released if you answer these questions first. So what I do is I start from question 1 and I mark questions that are theoretical. So the reason I mark theoretical questions is so that I can know how many questions are theoretical. So let's flag theoretical questions. Okay, if I click here now, all the questions that are flagged are theoretical questions. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 questions theoretical. Let's see if we have a question unmarked, which is theoretical. Okay, so that's it. We have added another extra question, so that becomes 14 theoretical questions. So let's start from question number 1. Which of the following calculates a sole trader's net profit for the period? We have closing net assets minus drawings plus capital introduced minus opening net assets. Okay, this is an accounting equation question. So the best way to answer an accounting equation question is to open a capital account. So what I'm going to do, I'm going to draw a capital account. I'm going to write the things that come on credit side and the thing that comes on debit side of capital account. So net asset means capital. So credit side opening, and then profit increases it, and then new capital also increases it, or capital introduced. Then drawing decreases it, so which is debit side, and then loss also decreases it, and then it gives us a closing balance. So the question requires a profit for the period. So if we add this side and minus this and this, it will equal profit. So if you want to know something in an account, leave it alone and minus every other thing, it will be found. So let's see which example is consistent with it. So it is closing capital. Remember, in a question there can be either loss or profit. So we can cross this one because they are asking for profit, so there shouldn't be any loss. And then closing capital plus drawings and minus new capital minus opening capital. So let's see. Closing net asset means no closing capital plus drawings minus drawings. This one is wrong. Second option, closing net assets plus drawings, yes. Minus capital introduced, yes. Minus opening net assets, opening capital. Yes, this is correct answer. So let's remove the flag. Second, which of the following explains the impressed system of operating petty cash? Regular equal amounts of cash are transferred into petty cash at intervals. The exact amount of expenditure is reimbursed at intervals. To maintain a fixed float, all expenditure out of the petty cash must be properly authorized. Weekly expenditure cannot exceed a set amount. So option C is not correct, because everything should be authorized, not just petty cash. And there is no set limit of expenses, weekly expenses in impressed system. So option number B is correct. So we have a fixed float at intervals. Which of the following statements are true about limited liability companies? The company's exposure to debt and liability is limited. Financial statements must be produced, yes. Company continues to exist regardless of the identity of its owner. So option number 2 is straightforward. We know that financial statement needs to be produced. Option 3 is also straightforward. Company is a separate entity from its owners. But option number A is a little bit tricky. The company exposure to debt and liability is limited. You guys might confuse this with limited liability. This doesn't mean limited liability. Limited liability only means that owners are limited, liable only up to the amount of their investment. It doesn't mean that company exposure to debt is limited. So option 1 is wrong. So that means D is correct. Which two of the following errors could cause the total of debit column and the total of credit column of trial balance not to agree? A check received from a customer was credited to cash and correctly recognized in receivables. Okay, check received was credited to cash. No, it should be debited. So if we correctly recorded in receivables, that means we credited receivables and we should have debited cash, but instead we credited cash. So there are two credits. This will make the trial balance imbalanced. Next, the purchase of non-current asset was omitted from accounting records. Error of complete omission does not affect trial balance. A transposition error was made. Transposition error does affect. A transposition error was made when entering a sales invoice into sales daybook. Okay, here is the trick. Sales daybook is a book of prime entry. So book of prime entry does not make the trial balance imbalance. There will be error, but on both sides, both debit and credit side. Rent received was included in trial balance as a debit balance. Okay, rent received is an income, which is credit, and we have recorded it as a debit. Okay, remove the marker. Are the following statements true or false? Statement of cash flow prepared using direct method produces a different figure to net cash flows from operating activities. From that produce of indirect method is used. False. Different figure. No, it doesn't produce the figure. It produces the same figure. Rights issue of shares do not feature in statement of cash flow. Rights issue is shares issued at a discount, but there is cash involved. So this is false. A surplus on revaluation of non-current asset will not appear as an item in statement of cash flow. Yes, surplus on revaluation does not appear directly in statement of cash flow. It is adjusted in calculating purchase of non-current asset, but it doesn't come directly. Profit on sale of non-current asset will appear as an item under cash flow from investing activities. No, profit comes in operating activities and it is added back to profit before tax. So this is false. Which two of the following are differences between sole traders and limited liability companies? A sole trader's financial statements are private. A company's financial statements are sent to shareholders and may be publicly filed. Yes. Only companies have capital invested into the business. No. A sole trader is fully and personally liable for any losses that the business might make. Yes. Unlimited liability. Remember, option 2 is wrong. Sole traders also have capital. Revaluation can be carried out in financial statements of a company, but not in financial statements of sole trader. So this is wrong. Okay, which of the following statements is true? Ratio based on historical data can predict the future of an entity. Maybe. The analysis of financial statements using ratio provides useful information when compared with previous performance or industry average. Maybe. An entity's management will not assess an entity's performance using financial ratios. No. The interpretation of an entity's financial statements using ratio is only useful for a potential investor, not necessarily. So option A is wrong because this is one of the disadvantages of historical data, that it cannot predict future with accuracy. So the best answer here is B. When we compare ratios with previous years or industry average, it will give us a better understanding of our performance. Which of the following items must be disclosed in notes to financial statements for intangible assets? A description of the development projects that have been undertaken during the period, a list of all intangible assets purchased or developed in the period, the useful life of the intangible asset capitalized in financial statements, impairment losses written off intangible asset during the period. Option D, impairment losses and the useful life of intangible assets must be disclosed. Which of the following statements are correct? Capitalized development expenditure must be amortized over a period not exceeding 5 years. Wrong. There is no limit of 5 years. So 1 is wrong. That means option A and B is automatically wrong. Capitalized development costs are shown in statement of financial position under the heading of non-current assets. Yes, intangible non-current assets. So 2 is correct. 3. If a certain criteria are met, research expenditure must be recognized as an intangible asset. No, research is never capitalized. So only option 2 is correct. Okay, let's remove the flag. 19. According to IS2, inventories, which two of the following costs should be included in valuing inventories of manufacturing company? Depreciation of factory, yes, factory cost, production cost. Carriage outwards, no, it comes after we sell it. Carriage inwards, yes. General administration, no. So remember, every expenditure incurred on bringing the asset to its present location and condition. That includes carriage inwards, that includes production costs. Which of the following should appear in company statement of changes in equity? Total comprehensive income for the year, yes. So that means B is wrong. Amortization of capitalized development costs. Amortization is depreciation for intangible assets. Amortization goes to P&L. The profit and loss goes to retained earnings. So it doesn't feature directly in statement of changes in equity. So 2 is wrong. So if 2 is wrong, that means B, C, and D is wrong. That makes option A automatically correct. Surplus on revaluation of non-current assets, yes. We have a separate account for revaluation and equity. Is each of the following statements about sales tax true or false? Sales tax is an expense to the ultimate consumer of the goods purchased. Yes. Sales tax is recorded as an income in the accounts of an entity selling the goods. No. It is liability. It is payable to government. Which two of the following are examples of those qualitative characteristics? The ISB conceptual framework for financial reporting identifies qualitative characteristics that make financial information fully represent what it purports to represent. So qualities. Accruals. Accruals is an accounting concept, we know that. Completeness. Completeness is a quality of information. Going concern is also accounting concept. Neutrality is also a quality. So information should be complete and neutral. Are the following material events after reporting date and before financial statements are approved? Adjusting events. Evaluation of property providing evidence of impairment and value at the reporting date. Yes. Sale of inventory held at the reporting date for less than cost. Yes. Discovery fraud and error. Yes. The insolvency of a customer with debt owing at reporting date which is still outstanding. Yes. So this completes our theoretical questions. The next thing I'm going to do is jump to section B and answer questions in section B. I'm going to leave these questions, the remaining questions in section A, and I'm going to first answer section B and then come back to these questions that are white in section A. So let's go to section B. Okay, section B. First question. So this is a multiple task question. Multiple task question is divided in different parts. Like this question is divided into two parts, which is tasks. Task number 1 and task number 2. So let's minimize these. We have background information here. This background information can be used for task 1 and task 2. But what is in task 1 does not have any connection with task 2. What is in task 2 does not have any connection with task 1. So each of the tasks should be answered separately. And they have connection with background, but they don't have connection with each other. Now some of the questions in these big questions, 15-mark questions, will be general theoretical questions. So try to answer those questions first, because you will be able to answer them without reading the background information. So let's see if we can find those questions here. Okay, these questions seem specific. Section 2. Okay, these questions seem general. Does each of the following factors illustrate existence of parent-subsidiary relationship? Okay, 100% of the equity shares held by an investor, yes. More than 50% means control, which means subsidiary. Significant influence, no. So significant influence exists in associate. Greater than 50% of preference shares and debts. Preference shares does not give control, so no subsidiary. Non-controlling interest, yes, non-controlling interest exists in subsidiary. Control, yes, control subsidiary. 50% of all shares and debts. More than 50%, not 50%. Greater than 50% of preference share held by investor, no. This is the same as Option number C. So yes, it's also not true. Greater than 50% of equity shares held by investor, yes. So we have answered this question without even looking at the background information. It means we have attempted 27% of this question. Now let's look at background information, because the task 1 relates to this background information. Casway Co. acquired 80% of the shares capital of Derwent Co. on 1st June. So 80% means subsidiary, and that means 20% NCI. And this is the date of acquisition. The summarized draft statement of profit or loss for Casway Co. and Derwent Co. for the year ended 31st May. Okay, 31st May compared with 1st June gives you 1 year. So if it is more than 1 year, 1 year or more than 1 year, then we don't have to divide the financial statement or P&L of subsidiary by months. If it is less than 1 year, we have to divide it by that much period. So let's see. Directly go to additional points. During the year, Casway Co. sold goods costing 1 million to Derwent Co. for 1,500. So cost 1 million and sales 1,500. It means 500,000 is the profit. At 31st May 2016, 30% of these goods remained in Derwent Co.'s inventory. So if we take okay, we have answered task 2, which was a general task. We had questions like 100% of equity shares held by an investor was yes, because 100% means there is subsidiary. Significant influence is included in associates. So no. Greater than 50% of preference shares. Preference shares does not give us control, so no subsidiary. Non-controlling interest exists in subsidiary. Control also exists in subsidiary. 50% of our shares, not 50%, more than 50%. And greater than 50% of preference shares. Preference shares does not give us control. Greater than 50% of equity shares. So equity shares gives us control, which means subsidiary. So now we are looking at task 1. Task 1 involves specific questions relating to the background. So for that we need to read the background. So Casway Co. acquired 80% of the share capital of Derwent Co. on 1st June 2015. The summarized draft statement of profit or loss for Casway Co. and Derwent Co. for the year end of 31st May 2016 are shown below. So we have 80% acquisition, so that means subsidiary, so that makes NCI 20%. And acquisition is on 1st June and the year end is 31st May. So that means we bought the company for full years, which means we don't have to divide this figure of subsidiary by months. So let's see, during the year, Casway Co. sold goods costing 1 million to Derwent Co. for 1,500. So cost is 1 million, cost and sales is 1.5 million. So that means 500,000 is the profit. So at 31st May 2016, 30% of the goods remain in Derwent Co.'s inventory. So 30% is the PUP. So let's calculate the PUP. So if we take 500 multiply by 0.30, it should give us 150. So 150 is PUP. We should remember that. Next, let's see. Okay, first, using the information above, complete the following financial statements. Now these blanks, you don't have to answer them and in the order that they are written. You can answer the ones that are easier and maybe leave the ones that are difficult. So let's start from the top. Statement of profit or loss, no. Statement of profit or loss, no. Consolidated statement of profit or loss. Asset is used with SFP. Consolidated statement of profit or loss for the year ended, yes. Okay, revenue. Remember, we take the revenue of the parent, we add the revenue of the subsidiary, we minus intercompany sales. So parent plus subsidiary minus intercompany sales. Yes, this one. And then cost of sales. We take parent plus subsidiary minus intercompany sales plus PUP. So let's do it. Yeah, they are not asking for figures, so we can just select it. So we have the parent plus subsidiary minus intercompany sales plus 30% of 500, which is PUP. Yes, this is correct. And then gross profit, if we take above figure and minus, if we take sales, we minus cost of sales, it should give us profit. So let's see. 8,400 plus 3,200 minus 1,500 gives us 10,100 sales minus cost of sales minus 4,600 plus 1,700 minus 1,500 and plus 150 and bracket. It gives us 4,950 as gross profit. Distribution costs. So only this cost of sales part is difficult in P&L of his consolidation. The rest is very easy. So let's look at distribution costs. Just add across everything. 1,500 plus 510 becomes 2010. Admin cost. Parent plus subsidiary. 1150. And then profit before tax, which is adjustment figure. So 4,950 minus 2010 minus 1150 equals 1,790. And tax, parent plus subsidiary, which is 740. And profit for the year. So 1,790 minus 740 gives us 1,050. And then attributable to equity holders. Let's do this part first. Non-controlling interest. Remember, there's a trick. If this PUP is not sold by the subsidiary, you can directly take this figure, individual figure, and multiply by the percentage of NCI. It will give you the figure of NCI. Now, if PUP is sold by the subsidiary, you have to minus PUP from this figure and then multiply by the percentage of NCI. So this is easier way of finding the share of the NCI profit. So let's see. 400 profit multiplied by 20%. 80. And then equity holders. Remember, equity holders is fully parents and 80% of the subsidiary. Group profit tax, it means the total minus the percentage of the subsidiary. Yes. So this completes this question. Let's go to the next one. Okay, this involves 5 tasks. So let's see if we can find in the same way the questions that are general questions. This seems, some of it seems specific, some general. This seems general question. So let's keep it open. Yeah, some of it is specific. Closing inventory also seems specific. This seems general as well. Here we have a general question as well, I believe. Well, let's see. The allowance for receivable is to be increased to 5% of receivables. The allowance for receivable is treated as an administrative expense. The year-end journal for allowance for receivable is shown below. Prepare the double entry by selecting correct option for each row. Okay, 5% of allowance has increased. If allowance increases, it is debit bad debts and credit allowance. But in this case, the allowance has been treated as an administrative expense. So we can debit administrative expense instead. Okay, so the year-end journal entry for allowance for receivable is given below. Prepare double entry by selecting correct option for each row. Okay, allowance doesn't affect receivables directly. They affect them indirectly, but not directly. Administrative expense, yeah, it should be debited if we are taking bad debts as an administrative expense. Allowance for receivable, credited. And revenue, no effect. Remember, bad debts is an expense. It doesn't have any effect on revenue. So we have answered we have taken 2 marks out of 3, and without looking at the background information. So I will keep it open because this is what this below part seems, because it is numbers, figures, it seems specific. So I want to do that next after I'm done with these general questions. So let's see. A plant is depreciated at 20% per annum using reducing balance method, and buildings are depreciated at 5% per annum on their original cost. Depreciation is treated as cost of sales. The year-end journal for buildings and plant depreciation is given below. Using the information above, prepare double entry by selecting correct option for each row. Okay, administrative expense. They didn't say anything about administrative expense, so no effect on administrative expense. Cost of sales. They said depreciation is treated as cost of sales. So the double entry for depreciation is debit depreciation, credit accumulated depreciation. So the depreciation part is the cost of sales, so we debit cost of sales. And then buildings. Depreciation does not have any effect on cost. It only affects accumulated depreciation. So no debit and credit. And plant cost, it also doesn't affect it. Plant accumulated depreciation, yeah, credited. And then building accumulated depreciation and plant accumulated, both of them are credited. So we have taken 3 out of 5 marks as well. The other seems specific. So now let's read from the top. Malright. So always minimize these tasks. It will remove the burden of your head. Malright, a limited liability company, has an accounting year end of 31st October. The accountant is preparing the financial statements as at 31st October 2017. A trial balance has been prepared. Okay. So do each of the following items belong on statement of financial position as at 31st October? So we have to see whether these items come on a statement of financial position or not. Remember, the year end is 31st October. So let's see. Building at cost. Yes, it comes on statement of financial position. But remember, it doesn't come directly. It comes in only NBV of the asset comes. So, but still it comes on SFP. Yes. And accumulated depreciation of the building. Okay, we have 1st November. Accumulated depreciation comes, but not opening accumulated depreciation. Closing accumulated depreciation comes. So it doesn't feature. Accumulated, so there is a trick in the date. So accumulated depreciation features, but because of this date here, it doesn't feature. It is opening balance. Only the closing balance will feature there. So no. Plant cost, yes, same thing. Again, accumulated depreciation 1st November does not feature. No. Bank balance, yes, a liability. It is a overdraft credit, so it is liability. Revenue, no, it goes to P&L. Purchases, no, purchases goes to P&L. Inventory first. Inventory comes in SFP, but not opening inventory. So no. Cash, yes, asset. Trade payables, yes, liability. Trade receivables, yes. Administrative expense, no, goes to P&L. Allowance for receivable at 1st November. Remember, this is also opening allowance. Only closing allowance will feature. So no. Return earnings at 1st November. Again, return earnings opening. Opening doesn't feature. Equity shares, yes. Share premium, yes. So we have answered this section as well. Allowance for receivable is to be increased to 5% of trade receivable. The allowance for receivable is treated as administrative expense. So we've answered the rest of the question. We only need this part. The amount included in statement of profit or loss after the allowance is increased to 5% of trade receivable is, okay, let's calculate the allowance. So we have receivables of 320. So 320 multiplied by 5%. That makes it 16. But we already have allowance, which is 10. So we only charge the difference, which is 6. Debit bad debts, credit allowance. So the figures are in thousands, so we only write 6. So this task is also completed. Task 3. Calculate depreciation chart for the below for the year ended 31st October 2017 using information above to help you. Okay, depreciation. So building a plant depreciation was 20% per annum on reducing balance, and building depreciation was 5% per annum on straight line. Let's do the straight line first, which is building. So building 740 multiplied by 0.05, which is 37. Yeah, building was depreciated at 5% per annum. Yes, so 37,000. And then plant 20% reducing balance. So 220 minus 110 gives you a net book value multiplied by 0.20 gives you depreciation, which is 22,000. So this task is also completed. Calculating depreciation now, cost of sales now, and the formula is opening inventory plus purchases minus closing inventory, the short formula. So you have opening inventory here, 75 plus purchases. Sorry, this is closing inventory. Opening inventory 160 plus purchases, which is 1140, and minus 1140 minus 75, so it is 1225. Complete the following statements. Double entry to post to year-end adjustment for energy cost is, okay, an invoice of 15,000 for energy costs relating to the quarter ended 30th November was received on 2nd December 2017. Energy costs are included in administrative expenses. So if we receive this invoice on 2nd December, that means we received this after the year end, which is 31st October. So that means this payment was accrued, but not the full payment, because this is for one quarter and that payment ends up to November. So November is 1 month later than the year end. So that means that the payment was for 3 months and 2 months of the last year was unpaid. So if we take that 15 divided by 3 multiplied by 2, it should give us 10,000. So 10,000 is the amount that is accrued. And the double entry for that is a debit administrative expense, because they said energy is administrative expense, and credit accruals. So this completes our section B. So we have attempted all the questions in section B. Now we will move towards section A and complete the remaining questions. So let's start from here. Let's start with the credit balance, which is 60,000 plus cash received from customer, no effect, cash paid to supplier, minus 302,800. Then discount received, allowed no effect, discount received minus, because it is a debit. Then contra always minus, debit payables, credit receivables, and then closing balance minus. The difference is 331,760. For these items, what total figure should be included in company's statement of financial position as at 31st December 2015? At 31st December 2015, the following requires inclusion in company's financial statements. On 1st January 2015, the company made a loan of 12,000 to an employee, payable on 1st January 2016, charging interest at 22% per year. On the due date, she repaid the loan and paid the whole of the interest due on the loan to that date. The company paid an annual insurance premium of 9,000 in 2015, covering the year end 31st August 2016. In January 2016, the company received rent from tenant of 4,000, covering the 6 months to 31st December 2015. For these items, what total figures should be included in company's statement of financial position? Okay, the first one is a payment to an employee. So our year end is December, and we received this payment on 1st January. That means on December the payment and the interest was due. So if we take that, it gives us 240 interest. So 240 interest plus 12,000 was receivable. So because the repayment was in 1 year, so it was current asset. So from first part we have 12,240 as current asset. Next, company paid an annual insurance premium of 9,000 in 2015, covering the year end 31st August 2016. Okay, this is a 1 year payment and it is up to August 2016 and our year end is December. So that means 8 months of this payment is advance, so which becomes receivable. So if we take 9,000 and divide it by, so we will add with this the 9,000 divided by 12 and multiply by 8, because 8 months is the advance. So it equals 18,240, including the first 12,000. Next one, on 1st January, the company received rent from tenant of 4,000, covering 6 months to 31st December 2015. It means if we received the rent on 1st January, so it was receivable at the end of the year, at 30th December, so it is accrued income. So that means this whole thing was receivable. So we add that to our amount. So it becomes 22,240. 22,240 is current asset and there is no liability in this question. What would the net profit be after adjusting for this error? A company's statement of profit or loss for year ended 31st December 2015 showed net profit of 83,600. It was later found that 18,000 paid for the purchase of motor van had been debited to motor expenses. It is company's policy to depreciate motor vans at 25% per year on a straight line basis with full year charge in the year of acquisition. When you have questions like this, the best way to do is to calculate the net book value of the asset. The net book value, the remaining value of the asset, has not been included in the financial statements, so that is the difference of the profit. So if I multiply this by 0.75, it should give me the remaining value of the asset. And the depreciation is full year charge, so it means not dividing by months. So if our current profit is 83,600, we add that with the current profit, it should give us correct profit now, which is 97,100. Which of the following statements about Zena is correct? Zena has the following working capital ratios: current ratio, receivable days, payable days, inventory turnover. Zena is taking longer to pay suppliers in 2019. Let's see. No, the days has decreased, so she's taking less, so it is incorrect. Zena is suffering from worsening liquidity position in 2019. Let's see. Let's look at C. Zena is receiving cash from customer more quickly in 2019 than in 18. If you look at the receivable, the days have increased. It means the customers are taking longer, so C is wrong. Zena's liquidity and working capital has improved in 2019. So if you look at this ratio, it has also decreased, the current ratio. The receivable also increased, the payable decreased, so everything is worse here. So option B is correct. The position has become worse. What amount of rental income should appear in company statement of profit or loss for year ended 30th April 2016? Company received rent from large number of properties. The total received in the year end 30th April 2016 was 481,200. The following were the amounts of rent and advance in arrears at 30th April 2015 and 2016. We have rent received in advance, rent received in arrears. When you have a question like this, there is a formula that you can use. We actually published on Facebook page as well, this one. So write opening and then plus payment or receipt. If it is expense, then there would be payment. If it is income, then there would be receipt. And then closing, plus or minus closing. So it depends. So accruals, opening, accruals, closing, prepayments, opening, prepayments, closing. So opening, closing prepayment accruals is income or expense that has been incurred and earned but not recorded. So what we do is we record it, so it is a plus. Prepayment is unearned expense or unearned income or expense that has been incurred or unpaid. So what we do is we minus it. And the opening is opposite of closing, so if closing is plus, opening would be minus, closing minus, opening plus. So we can use this technique in this question to answer it quickly. So let's see, this is opening figure and this is closing figure. So if we take opening, prepayments, opening is added, received in advance means prepayment, and closing prepayment is deducted, so minus 31,200. And then rent, opening is minus the accruals, closing accruals is added, and then plus the payments, 481,200. So 475,900 is the answer. Okay, this is a very straightforward question. What opening balance should be included in a statement in the following periods trial balance for motor vehicles at cost at 1st July 2016? The company's motor vehicle at cost account at 30 June 2016 is as follows. So what should be the closing balance? Closing balance is already given here. So it is a debit balance, remember, even though it is on credit side. Closing balance is always on opposite side. So 36,750 is the answer. What amount should be charged to statement of profit or loss in a year ended 30th June 2019 for electricity? Following transactions relate to Rashid's electricity expense ledger account for year ended 30th June 2019. Prepayment brought forward, cash paid, and accruals carried forward. Remembering our formula, remember opening prepayments is a plus, and then adding the payment or receipt, and then closing prepayment, closing accruals is a plus. So both of them are a plus. 6,600 is the answer. What figure should appear in statement of profit or loss for year ended 30th June for these items? At 30th June 2015, a company's allowance for receivable was 39,000, and 30th June 2016, the trade receivables totaled 517,000. It was decided to write off debts totaling 37,000 and to adjust the allowance for receivable to equivalent of 5% of trade receivables based on past events. Okay, if you have a question where there is allowance and bad debts combined, it is better to do allowance, bad debts first and then do the allowance, because bad debts is deducted from receivables. So 517 minus 37,000 equals 480,000. So 480,000 multiplied by 0.05. This is the closing allowance. And we have opening allowance of 39,000. So if we minus the opening allowance, that means we have a decrease of 15,000. So decrease of 15,000 goes as a credit to bad debts or P&L. And plus the bad debts, 37,000, will give us the total expense that will be recorded in P&L. What amount should Valley report in statement of financial position as accounts payable at 30th June 2016? The total of list of balances in Valley's payable ledger, it means the subsidiary ledger, was 438,900 at 30th June 2016. This balance did not agree with Valley's payable ledger control account, which is the general ledger. The following errors were discovered. A contra entry of 980 was recorded in payables ledger control account, but no entry in payable ledger. So if we take the payable ledger balance, this is an error that is in the payables ledger, so it should be removed. So contra is decrease. And then total of purchase returns their book was under cost by 1,000. Remember, if there is problem in total in their books, it goes to general ledger, not subsidiary ledger. So no effect on subsidiary ledger. An invoice for 434 was posted to the supplier's account as 4438. So what we have done, we have recorded more figures in supplier's account than we should have. So that difference should be deducted from it. So minus, okay, 4344 minus 4434. So 90 is the difference. So 90 difference plus 3438 900 and minus the 980. It should give us 437,830. This is the correct balance that should be shown in payable ledger or in financial statements. What is Parisa's gross profit for the year? Parisa has not kept accurate accounting records during the financial year. She had opening inventory of 6,700 and purchased goods costing 84,000 during the year. At the year end, she had 5,400 left in inventory. All sales are made at a markup on cost of 20%. So what is the gross profit that she earned? So first we have to find the cost of sales. So cost of sales is opening inventory, which is 6,700, plus the purchases, which is 84,000, and minus the closing inventory. So it gives us cost of sales. So this is a markup. So markup is a percentage on cost. We can directly multiply that by 0.20. It will give us profit, which is 17,060. What was company's capital structure at 30th December 2015? At 31st December 2014, the company's capital structure was as follows. Ordinary share capital 125,500,000 shares at 25 cents each. Share premium 100,000. In the year ended 31st December 2015, the company made a rights issue of 1 share for 2 held at 1 per share, and this was taken up in full. Later in the year, the company made a bonus issue of 1 share for every 5 held, using the share premium account for this purpose. So there are 2 transactions, one the rights issue and then the bonus issue. Remember, rights issue is shares to existing shareholders and bonus issue as well to existing shareholders. The difference is bonus issue is for free and rights issue is at a discount. So let's see. Actually, let's do this on a paper. We have issued how many shares? 142, and already we have 500,000 shares. So if that is the case, we have 500,000 multiplied by 142, which is 250,000 shares. 250,000 shares were issued at $1 each. So that means we received 250,000 cash. The share, the par value is 25 cents. So multiply by 0.25 should go to share capital. Which is 62,500. And the remaining, which is 75 cents, will go to share premium account. So $187,500. If you deduct this from the top, it will also give you the same result. Next, what happens? Remember, we don't need to do double entry. Yeah, this is not a minus figure, it's a plus figure. Next, later in the year, company made a bonus issue of 1 for every 5 held using the share premium account. So we took the amount from share premium account. So we had 500,000 shares plus 25,000, so total 250,000 becomes 750,000. So multiply by 1 divided by 5 will give us extra shares. 750 multiplied by 1 divided by 5, which is 150,000 new shares. So 150,000 new shares multiplied by 25 cents. This is the minimum value, the par value of the shares. It becomes 37,500. So it is added to share premium. It is added to share capital and deducted from share premium. So if we draw up our accounts, opening 125,000 and 100,000. First transaction, increase. Second transaction, increase, but decrease here. So let's calculate it. Let's see, maybe we are able to answer the question. 225,000. So it means A and B is not the answer. It is either C or D. So share capital 225,000, share premium it becomes 250,000. So the answer is D. What should be depreciation charge for year ended 31st December 2015? Plant and machinery accounted cost of a business for the year ended 31st December was as follows. So we have plant and machinery at cost. So we we have opening balance and then purchase and then disposal and then the closing balance. The company's policy is to charge depreciation at 20% per year on straight line basis. So this question is where many students struggle, but actually it is very easy question. It can be answered in two ways. The first method is to take 240,000 and charge depreciation for the whole year, and then take 60,000 and charge depreciation only for the period of use, and then minus take 60,000 and minus depreciation of this for the period of non-use. It means from the date when the asset was sold. This is one method, and another method is the looking at the balance on the account for months. So let's look at the first one. So if we take 240,000 multiply by 0.20, full year depreciation equals 48,000. So 48,001 and then 60,000 charge depreciation at 0.20, and we look at the period of use. The period of use is from 30th June, so it means end of June, and the year end is December, so 6 months. So 60,000 multiplied by 0.20 multiplied by 6 divided by 12. 6,000. So 6,000 for this one. And then minus the depreciation of the asset sold, which is 60,000 multiplied by 0.20. So yeah, this was 6 divided by 12. So the asset was sold on 31st March, means 3 years into the year. So that means 9 months depreciation should be removed. Which is 9,000. So the total would be 48,000 minus 9 plus 6, 45. So this is one way of answering this question. Okay, the purchase is actually 160,000. So let's redo that. 160,000 multiplied by 160,000 multiplied by 0.20 multiplied by 6 divided by 12. 16,000 160,000 multiplied by 0.20 multiplied by 6 divided by 12. 16,000. So adding 10,000. So it would become 55,000, yeah. So answer is A. This is one way of doing it. Another way of doing it is if you create a timeline, yeah. So we have year end and year start. We had opening balance 240 here. Then there was at March there was one change, and at June there was another change. At March we sold, so minus 60, and at June we bought. So the balance here is 180, and then the balance here adding it is 340. So we have this for 3 months, this for 3 months, and then this for remaining 6 months. Multiply by 6, divide by 12. This one multiply by 0.20, multiply by 3, divide by 12. 0.20 multiply by 6, divide by 12. So 240 multiply by 0.20 multiply by 3 divide by 12 equals 12. And then 180 multiply by 0.20 multiply by 3 divide by 12, 9. And then 340 multiply by 0.20 multiply by 6 divide by 12. So adding them all together gives you 55, the exact same answer. So use whichever method you like. I like the first method better. Okay, what is Hasan's return on capital employed? Remember, return on capital employed is profit before interest and tax divided by capital employed. And capital employed is equity plus non-current liabilities. So in this case, it is the equity is 35,600, and then we have loan liability, which is non-current liability. So total capital employed is 42,500. So okay, so what is Hasan's return on capital employed? The following are extracted from Hasan's financial statements. Remember, capital employed is return on capital employed is profit before interest and tax divided by capital employed, and capital employed is equity plus non-current liabilities. And equity in this case is 35,600 and non-current liability is 6,900. So total capital employed is 42,500. And we have profit before interest and tax as well. So straightforward, 10,200 divided by 42,500, which equals 24%. Which of the errors will require an entry to suspense account to correct them? Remember, those errors that affect trial balance will require an entry in suspense account. Q's trial balance failed to agree and suspense account was open for the difference. Q does not keep receivables and payable control accounts. The following errors were found in Q's accounting records. In recording an issue of share at par, cash received of 33,000 was credited to ordinary share capital account as 330,000. So this is error of transposition. This will affect trial balance. So it means B is wrong answer. 2. Cash of 2,800 paid for plant repairs was correctly accounted for in the cash book. It means cash was credited, but was credited to plant asset account. So plant asset is also credited. So it is error of principal as well, and then there are 2 credits as well here. So this will also affect the trial balance. So that means option 4 is also wrong because it doesn't have 2. So either 1A or C could be the answer. The petty cash book balance of 500 had been omitted from trial balance. So petty cash is a debit balance. If it is omitted from trial balance, the trial balance will not balance. So this is also correct. So that means C is wrong automatically as correct. And then a check for 78,400 paid for the purchase of motor car was debited to motor vehicle account as 87,400. So error of transposition. Which of the following is correct accounting treatment for the claim in financial statements for year ended 31st July 2019? Prior to the financial year end of 31st July, Canon Co. has received a claim of 100,000 from a supplier for providing poor quality goods which have damaged the supplier's plant and equipment. Canon Co.'s lawyer has stated that there is a 20% chance that Canon will successfully defend the claim. Okay, there is a 20% chance that we will defend the claim. It means there is 80% chance that we will not defend it. It means there is 80% chance that it will become a liability, which is more than probable. So if it is probable, then it is a provision. Canon should disclose a contingent liability. No, Canon should provide for expected cost of claim of 100,000. Yes, this is the answer. The whole thing would be considered as a provision, not a percentage figure. How much should Gareth capitalize as non-current asset in relation to the purchase? Gareth, a sales tax registered trader, purchased a computer for use in his business. The invoice for the computer showed the following costs relating to the purchase. We have computer 90,000, which is capital expenditure. So 890. Then additional memory, which is expansion, capacity, capital expenditure. Delivery, capital expenditure. Installation, capital expenditure. And then maintenance. Maintenance should not be considered as capital expenditure. And then sales tax is also not capital expenditure. So 1,015. What should be correct balance per the cash book? The following bank reconciliation statement has been prepared by a trainee accountant. Overdraft per bank statement, unpresented checks, outstanding lodgements, cash at bank. When you see a question like this, the best thing to do is redo the calculation and prepare this statement by yourself. So let's see. Overdraft per bank statement, which should be a credit balance, which should be a minus. And then unpresented checks. Unpresented checks is also a minus. And then outstanding lodgements. Outstanding lodgements is a plus. So 1690. So the balance is, minus 3860 minus 9160 plus 16690. So it becomes 3670 positive balance. So it is a balance at bank, not overdraft. What should the closing balance be when all errors made in preparing the receivable ledger control account have been corrected? The following control account has been prepared by a trainee accountant. So if you see a question like this, just like the previous question, redo the account. So this is a receivable account. So anything that should come on debit side, I will start with the opening balance, and without reading the question, just take the opening balance as plus figure. Now, something that should be credited, minus it. If something that should be debited, add it. Because receivable itself is a debit. So credit sales. Credit sales would increase receivables. So plus. And then cash sales. Cash sales does not have any effect on receivables. Contra against credit balances and payables. Remember, contra is always debit payables, credit receivables. So minus. Cash received from credit customers. Cash received is a credit. It decreases receivables. So minus. Discount allowed to credit customers. So debit discount allowed to credit receivables. So minus. Interest charge on overdue accounts. So credit interest, debit receivables. So plus. Irrecoverable debts, debit irrecoverable debts, credit receivables. So minus. Allowance for receivable. Allowance for receivable does not have any effect on receivables. So 307,100 should be the correct balance. What is the value of company's closing inventory of engines at 30th April 2016? A company values its inventory using FIFO method at 1st May 2015. The company had 700 opening balance. So this is opening, valued at 190 each. During the year ended 30th April 2016, the following transaction took place. We purchased, and then we sold, and then we purchased, and then we sold. So dates are in sequence, so no problem. So remember, when we sold this 400, they were sold from the opening 700. So it means 300 were remaining after this sale. And then we received and then we sold again. So this sales again is from the original amount. So 300 were remaining after this sales, 50 will be remaining. So in conclusion, 50 this is remaining, 500 this is remaining, and 300 this is remaining. So it is 50 multiplied by 190 plus 500 multiplied by 220 plus 300 multiplied by 230. Okay, let's redo it. 50 into 190 becomes 9,500. So 500 into 220 equals 110,000, and then 300 into 230 becomes 69,000. 69,000 plus 110,000 and plus 95,000, 9,500. It becomes 188,500. What is Amy's profit for the year ended 31st December 2018? Amy is a sole trader has had assets of 569,400 and liabilities of 412,840 on 1st January 2018. During the year ended 31st December, she paid 65,000 capital into the business and she paid herself wages of 800. At 31st December, Amy had assets of 614,130 and liabilities of 369,770. So what is Amy's profit for the year ended 31st December 2016? Okay, this is just an accounting equation question, so we can do that with the first question that we did. The first one was a theoretical one, and this is numerical. So we have profit figure, the same, closing capital minus opening capital minus capital introduced and minus drawing. This is actually drawings. So wages in a sole trader means drawings. So we calculate the closing capital, which is 614,130 minus 369,770. It gives us 244,360. This is the opening capital. So minus, this is the closing capital minus the opening capital, which is 569,400 minus 412,840. So it gives us 156,560 minus 65,000 and plus the drawings. The drawings, 800 into 12 becomes 9600. So 32,400. And then lastly, which of the following could explain the imbalance? Bumble Co. extracted the trial balance for year ended 31st December 2017. The total of the debit exceeded the credits by 300. So it means debit side is more than credit. Discount allowed of 150 was extracted to the debit side of trial balance. Discount allowed is an expense, so it should be on debit side, so no problem. Bank ledger account did not agree with the bank statement by a debit of 300. No problem. Discount received of 150 was extracted to the debit column of trial balance. Yeah, this is interesting. So discount received is a credit, and if we write it on debit side, what it will do, okay, discount received is a credit, and if we write it on debit side, the debit side will be higher, and it will be higher by twice. If you write something on wrong side, that side will become 2 times higher of the amount. So C is the answer. So this completes our full exam. After this, I will attempt the 2 additional MTQs questions. So it is important to watch that video as well. Okay, now let's attempt extra 2 MTQs question. One of the question is a cash flow question. The previous exam didn't include a cash flow question, and then second question is a consolidation question, but SFP consolidation, CSFP. So let's start. So let's see. Yeah, this is a cash flow question. If you receive a cash flow question, I believe you should be very happy about it, because around 70% of the cash flow question you would see is very easy to attempt. So let's start. The following information relates to Geofrost, a limited liability company for year ended 31st October 2017. And we have a small P&L and SFP for 2 years comparatively. So this is the previous year and this is the current year. And we have additional information. Depreciation expense for the year was 4.6 million, and assets with carrying value of 1.9 million were disposed of at a profit of 720,000. Okay, so we have profit on disposal given to us, and then depreciation is also given in this example. So first, let's answer these the questions where we have to select items. So the title starts from profit before tax. And then depreciation, you should know depreciation is added back to P&L because depreciation is a non-cash expense. It has been deducted from P&L, so we are adding it back. Profit on disposal has been added to P&L, but it is non-cash, so we remove it back. Inventory, we have to see whether it has decreased or increased, so we will leave that as it is. Tax paid is deducted, so this is actual figure that we are including here. So for the first few items, we do opposite of P&L. In the P&L, if they are added, we deduct it here. If they are deducted in P&L, we add it here. And then payments to acquire non-current assets, payment should be subtracted. Proceed from sale of non-current assets, proceeds is inflow, so it should be added. Proceeds from issue of share capital, proceeds added. Repayment of loan payment, so subtracted. And then cash inflow and outflow, we have to calculate that. So the figures that are given, we should write those first. Like profit before tax is given. So let's start with that, 15,000. And the figure here is also 15,000. So actually it is 15 million. So it has been rounded off to 30,000. See, we have already attempted 30% of this exam. Then we adjust for non-cash items. So first thing, depreciation. Depreciation is also given. So 46.58. Profit on disposal is also given here. So leave the other part where we need calculation. Let's look at this last bit first. Last bit is also easier, so we will do that first. So cash or cash equivalents at the beginning of the year. So we have cash. If there is any overdraft, we need to minus that overdraft from this one because it would be a negative cash. So opening cash is 106.30. So 106.30 minus the overdraft, which is 429. It equals 634. So 634 is opening cash and cash equivalents. And then closing, again we have to take the opening and we have to take cash and minus the overdraft. So 2045 minus overdraft 1230 becomes 1815. So cash has increased. There's a positive cash flow. 815. So we calculate the difference between the two. The difference is 815 minus 634, which becomes 181. 815 minus 634, 181. So the cash has increased, so it is an inflow. So we've already answered 50% of the question. The next easy bit is the inventory part. So we just have to look at the increase or decrease. So inventory opening is 96.35 and closing is 35.60. So that means inventory has decreased. If inventory decreased, it is positive cash flow. It means that we have sold the inventory. Receivables. Uh, 4542 minus 6405. It becomes minus 1863. It has increased, so it is a negative cash flow. So this is decreased, so added. This is increased, so subtracted. So if when receivable increase, it means we haven't received the money from sales. So it is negative effect. Then payables. Payable is opposite of inventory and receivables. When payable increases, it is positive cash flow. It means that we haven't paid our suppliers. When they decrease, it means we have repaid them. So minus closing. So they have increased. It means we haven't paid them. That is a positive cash. Next, tax paid. Tax paid, we take the opening tax, which is here. So this is how it should be calculated. Opening minus closing and plus current, which is plus 43.50. So we have paid 4,990. Interest is also calculated the same way. And then payments to acquire non-current assets. This is the difficult part usually. So leave that to the end. If you want to leave it, it is also an option, because it is not sometimes worth investing that much time for this extra mark. So you could leave it and come back later if you had time for this part of the cash flow. Usually this is the difficult part. And then proceeds from sale of non-current asset. This is also here. So we have carrying value of an asset, which is 1974, and we've sold it for profit. So if we take the carrying value and we add it to the profit, it will give us the proceeds. So 74 plus 720. It should give us 2694. $26.94. And then proceeds from issue of share capital. If share capital increased, it means we have proceeds. If it decreases, it means we have repayment. So share capital, including retained earnings, 17,496 minus 19,365 equals 1869. When shares increase, it means we have received money from issue of shares, and then we have repayment of loan here. So we have 10,000 and decreased to 8,000, which gives us 2,300. So we have already attempted 90% of this exam. So for this extra bit, we have to decide whether it is worth investing the time on it or not. But let's find purchase of non-current asset. So we start with the net book value of the asset, which is opening 26,574 minus closing So we have taken the opening net book value and then we plus or minus what affects the net book value. And the difference will be given by the purchase. So one change that happens is the depreciation. So depreciation decreases 4,658. And if there is any revaluation, we add revaluation to it. There is no revaluation in this question, but if there is revaluation, it means revaluation increases net book value. We would have added it. And then we have disposal. The net book value of the disposed asset should be removed. minus 1974. It will give us the difference, which is 24,340. 24,340 is the purchase of the non-current assets. So this completes our cash flow question. Okay, let's attempt the second question, which is consolidation. So let's hide all the tasks. So we have 4 tasks here. We will search for the questions here that are general questions. So this doesn't seem like a general question. This seems a general question. Are each of the following statements relating to consolidation correct? NCI will always feature within consolidated financial statements. Not necessarily. If a company is bought 100%, there is no NCI. Goodwill is recalculated using the most recent fair values at each reporting end. Not. Goodwill is calculated at the date of acquisition. The process of consolidation results in a single separate legal entity. Legally, whenever there is consolidation, it doesn't create a third company. Legally, the 2 companies are separate, but financially, they are the same. So this is a no. This also seemed like specific question. This also seems specific question. So now let's read requirement, the background. On 1st January 2013, which is the acquisition date, Gusta Co. acquired 75% of the share capital of ERCA for 1.3 million. That means 25% is NCI. The retained earnings of ERCA Co. at the date were 480,000. ERCA Co. share capital has remained unchanged since the acquisition. The following draft statement of financial position for 2 companies has been prepared at 31st December 2019. So there's nothing interesting to look at in the financial statement, but one thing that is important is the investment. This investment is internal and it should be removed. If you look at this investment, it specifically says ERCA Co. It will be double counting, so we remove it. So, and then additional points, the non-controlling interests, NCI was valued at 450,000 at 1st January, which is fair value of NCI at acquisition. So let's look at the requirement of the question. Complete the following to determine the goodwill arising on acquisition. Okay, remember, goodwill is the payment of the parent and the fair value of NCI less the fair value of net assets at acquisition. So investment of P, the parent, 1380, and then fair value of NCI at acquisition, which is given above, which is 450. So this gives us total consideration, which is 1380 plus 450, which becomes, let's see, 1380 plus 450, 1830. less fair value of assets at acquisition, which is net assets, which means equity. So we look at the equity at acquisition. So this financial statements is at consolidation date, which is the 31st December. We need to find them at acquisition date. The share capital remain the same, so the share capital of the subsidiary would have been 1,000 at acquisition as well. So there is no problem with this one. So we can take the 1,000, the original figure, which is in consolidation date, and then the retained earnings at acquisition should be written here. And retained earnings at acquisition were 480,000. The retained earnings has changed, so 480. So it gives us total net assets or equity at the date of acquisition. So this deducted from the top, which is 1480 total, deducted from the top will give us goodwill. So A minus 100% of B, not 75%, will give us the answer. Next, select the formula which correctly calculates NCI as at 31st December 2019 in accordance with IFRS 10 consolidated financial statements. Fair value of NCI at acquisition plus 25% of retained earnings as at 31st December. Remember, whatever was NCI at the start of the year, which is in this case 450, plus the change in net asset. So the change in net asset, if there is no PUP involved, so it will be the retained earnings. The retained earnings has changed from 480 to 660. So that difference. So fair value of NCI at acquisition plus 25% of retained earnings as at 31st December. No. 25% of net asset at 31st December. No. Fair value of NCI at acquisition plus 25% of post-acquisition profits. Post-acquisition profits is the difference of net assets at acquisitions and net asset at consolidation. So this is correct answer. This was also actually a general question. The 25% is specific to this question, otherwise it is a general question. Calculate the following figures, which will be reported in Gusta's consolidated statement of financial position as of 31st December 2019. Okay, investment should be 0 because it is internal. Other assets should be combined. So 4,500 plus 2,400. Remember, we take 100% of parent, 100% of the subsidiary. Which is 6,900. 6,900 here. Share capital. Share capital, we only take the parents. Retained earnings. Retained earnings needs calculation, so leave that for the end. Liabilities, both of them combined. So 1840 plus 740, which is 2580. So okay, to calculate retained earnings, we take the parent's retained earnings, which is 2040 plus the change in retained earnings of the subsidiary, which is 480 to 660. So 480 less 660 multiply by the percentage of the parent, which is 0.75. So it becomes 135. So 2040 plus 135. So there is no PUP in this question. If there was PUP and sold by the parent, we would have deducted it from here. So this should give us retained earnings to the parent, group retained earnings. So this completes this question as well. Remember, you don't have to answer these questions in the sequence they are written. About 50 or so % of the question will be very easy to answer. So this completes our video. So we covered one whole exam and then 2 extra MTQs questions to help you specifically understand 2 topics. Okay, this is all. Have a nice time and good luck.